Stocks trade right above their flat lines as monetary and fiscal policy weigh on investors. Before we get into that, we have Matt Cheslock from Virtu Financial. Hi, Matt. Thanks for coming to the show.
Sure, Olivia. Anytime. It's good to be on.
Yeah, our viewers really like your insights, so let's just get right into it. Yesterday, the Fed minutes released that they are shrinking the balance sheet, and the initial reaction wasn't well received by investors. So what effects will this have on monetary policy and the markets?
You know what's funny is that I can't remember a Fed minutes release having that much impact on the market in a very, very long time. So people are closely watching for any insight that they can get on what the Fed's looking to do. There's really some unclarity about how many raises we're going to have, if any. 2, 3, 4. Then we had what happened to Fed Governor Lacker earlier in the week having to resign. So there's so much uncertainty with the Fed right now. And you can see the dramatic move that the market made from being up 200 to down 50. That's a dramatic move, especially in the last hour of trading.
Yeah, that was really surprising. And tomorrow, of course, Fed heads and investors will be watching the Nonfarm payrolls number. And leading up to that, ADP was hot. But ISM and markets showed that there was actually a slowdown in service employment. So which do you think is a proper indicator for tomorrow?
Well, you know what? I think the forecast is somewhere around 180, and I think that was the average for the last 12 months. So that number would be right in line. I think that would give the Fed a pretty clear indication that employment is pretty full. We still haven't gotten to the inflation threshold of 2%. That's what the other holdup is. But I think it would probably, a blowout number of 235 and higher obviously would probably cause greater alarm that the Fed might be behind the curve. But I think 180 to 200 probably keeps status quo, probably 2 rate hikes this year.
Okay, well, Matt, for our viewers, let's just take a quick market snapshot because telecom is down today, energy is up, gold making a little bit of a comeback. What do you make of all this?
Gold was interesting yesterday. It rallied during that sell-off, not surprisingly, because of the risk-off trade that was occurring. But gold is right at some resistance level at the 1258, 1260 level, so it's got to break through that and close above that before that becomes a real buy. Energy is probably more of a contrarian type trade. It's been down, it's been under pressure, but it's funny now that energy's starting to get a little bit of bid to it as people are talking about it breaking below 50 after the inventory number. So a lot of conflicting trades out there. I think you got to stay nimble and you just got to trade the trend. And the trend right now is to be quick with your trade.
Hey, the trend. Awesome. Trend is your friend. Well, Matt, on a rainy day like this, wouldn't it be nice? One can only dream being in Florida, maybe playing some golf, but maybe not so much because President Xi is down there right now and what President Trump described as a very difficult meeting. So do you think that the Trump administration will make any headways combating currency manipulation or nuclear experimenting in North Korea?
Well, I'm not sure they're going to get very far with that. But, you start talking about the border tax and things like that. There's a lot for them to discuss, and I think anytime they get to at least meet and discuss it face to face, it becomes a lot better than just tweeting it and stuff in the papers. So I think they'll come out with some positive comments, but I don't know if it'll really lead to anything substantial.
Okay, well, Matt, thank you so much. Hopefully that this weekend will be sunnier than today. Hope to see you next week.
All right, take care, Olivia.